and welcome. You have tuned into Market Fatafat on ET Now. I'm Shrishti Sharma and with me is Ankita Saxena. And viewers, this is the show where in the next 1 hour, we're going to be highlighting all the buzzers in trade right now, either on the back of the news flow or on the back of the technical. So let's welcome on board we will welcome on board our researcher as well as technical expert. But before that, let's have a quick look what the markets are up to, because Ankita, it's turning out to be great afternoon for the Indian market.
Absolutely, Shrishti, like you mentioned, it's a great afternoon for Indian markets. We are advancing for the fifth consecutive session. In fact, Nifty is sitting at 3-month intraday high, and so is Nifty Bank, that is sitting at all-time high levels. In fact, Nifty Bank is doing very, very well. It's up almost 1,000 points, 2% gains coming on Nifty Bank. The PSU counters, worth mentioning, are leading the pack from the front. As far as the sectors are concerned, Nifty IT is also another pack that is doing very well, seeing great recovery after the drawdown that we saw in the IT counters. We saw Infosys that came out with its result. Even the results were muted, were subdued, but the commentary really gave a ray of hope to all the IT pack, the entire IT counter. And the back of that, we see names like Coforge that's trading upwards of 5.5%. There's Emphasis that's trading up 5.5%. Tech M is leading from the front. In fact, Tech M is the top Nifty gainer as well, trading with gains of 5.2%. These names are doing HCL Tech, that's due for its result tomorrow, is also doing very well before the results. That's trading up 3.5%. But other names that are doing well and are really, lending support to Nifty is IndusInd Bank, that's up 4%. We also have from the financial pack, we have Bajaj Finserv, we have Shriram Finance, Axis Bank that is lending support with gains of upwards of 3.5%. We also have Trent that we saw the results come out for Trent. The results weren't that great, and on the back of that, we did see that downtick coming in on the stock. Now we see a good recovery coming in today on Trent. That's trading with gains of 3.5%. Broader markets also outperforming the benchmark indices, and net advance decline ratio is tilted in the favor of advances. Shrishti.
Well, certainly, that's the market picture right now. But let's move on and let's welcome on board our team of researchers as well as our technical expert for today. On the technical front, let us welcome Sameet Chavan, who is joining us on the show right now, as well as from the research side, we have Ravinder as well as Ansh with us. A very good afternoon, gentlemen. We will come to you. Well, let me take the first stock and highlight Zomato. That is eternal now. For our viewers, because that's the stock is in focus. You must have witnessed that the stock did start the day in the red, but now is in the green territory. Why so? Because the company has come out with an announcement where they have proposed the FII cap at 49.5%, and that's a strategic move, because this decision is actually aimed to align with the Indian regulatory norms, and this will actually enhance the operational flexibility, particularly for its quick commerce business, that is Blinkit. And this proposal actually awaits the shareholders' approval. That is expected on 21st of May. But if this goes through, then this will actually be in line with the Indian regulatory norms, and this will also lead to some of the outflows in the index fund per se. Case in point being MSCI as well as FTSE index, there could be some bit of an adjustment. But when it comes to the brokerages and their take on that, so they're clearly highlighting that the market and this development was widely anticipated by the market participants. Overall, with the sort of an outflow that is expected, at least in the near term, there could be some implications or some bit of a upward pressure for this particular stock, but they're not expecting much of a correction in this particular counter, and they don't perceive this as a significant de-rating scenario for the stock. And hence, even after starting the day in the red, the stock has turned into the green territory, shifted with the market movement, and that's Zomato for you, why this counter is in focus today.
All right, Zomato in focus in the back of that news flow. But Sameet, coming to you on the charts, you've picked out M&M for us. Now, this counter I can see in the last 5 days has given some sort of a breakout there. It's up almost 7.5% in the last 5 days. From here on, do you see the positive momentum to continue on M&M?
See, with some, respite in the, global tariff that we have been witnessing since the last couple of weeks. So the auto industry was impacted severely, and now it is showing some sort of comeback. M&M, which has corrected sharply from the higher levels, has seem to have found some base around 2400, 2450, and in last 5 to 6 days, the stock has been giving a stellar move. It is now, the stock is now approaching its crucial 89-day exponential moving average place around 2800, 2020, which is the psychological mark as well. So once the stock surpasses 2800, 2020, we expect this move to extend towards 2900 and beyond. So we are a bit on the stock. Stock has already surpassed its important, resistance levels 2650, 2680. Now any pullback is likely to get bought into. Hence, the stock certainly is poised for a good move from here on.
All right, that's M&M on the charts. That's poised for a good move, but giving good moves today is also HDFC Bank on the back of good set of quarter four numbers and bullish brokerage note coming in there. Now we do see the NIMS expansion and loan book growth that augurs very well for the company. In fact, let's look at the numbers then. We had the NIIs that saw an uptick of 10%, 10.28% on a year-on-year basis. The PPOP, however, were down 9% on a year-on-year basis, but the PAT saw a growth of more than 6.5% on a year-on-year basis. The GNPAs also, improved and they declined by 9 basis points on a sequential basis, and so did the NNPAs that improved by 3 basis points on a quarter basis. Now, also we had the deposit rate that went up by 14% on a year-on-year basis, and the board has also proposed a dividend of 22 rupees per share. We had Nomura that came out with a note. They're maintaining a buy on the counter with a target price of 2,140 rupees. They've also increased the target price, so an upgrade coming in from Nomura. They feel that the performance has been quite strong, and they have increased the FY26 and FY25 loan growth estimates to 11 and 12% on a year-on-year basis. IFL also maintaining a buy call with the target price of 2,160, and we also have a Nuvama that's come out with a positive brokerage note on HDFC. On the back of that, HDFC is in focus today.
All right, so definitely great moves on HDFC, but with this, let's also go across and listen in what the management has to say.
Credit deposit ratio has been brought down from the highs at the time of merger, which was at about 110%, to around 96% as of March 2025. Our deposits have grown faster than the system, and so has it grown faster than our loans as well. Next year, in line with what we had committed, the adjustment in CD ratio will not be so steep, supporting the loan growth for the bank, but it will be on a downward path.
You saw the NIM for us over the last 12 months, if you see, operated in a very narrow band. And there are two things going on in the cost of funds to be stable there. One is the borrowing mix has come down during this time period. Whatever is on the page there, you see that the borrowing mix in the first of the time period, December 23, was 21%. And then from then on, last March, it was 18%, and now it is 14% borrowing mix. So that's one of the tailwind that contributed as a positive item to the cost of funds. Then there is a headwind in the cost of funds we have seen is the customer preference towards time deposit.
All right, moving on from HDFC Bank to another counter that looks very attractive is CDSL. After the correction that we've seen, Sameet, CDSL, what do you see on the charts for this counter? Last 5 days it has moved up 10%. It is trading with gains of 4% today. Also, from here on, what are the levels that you're penciling in for this?
See, the moment, market has seen some sort of respite and has given a decent pullback, CDSL also seems to have given, a decent pullback move. On the daily time frame chart, if you look at the charts quite closely, the stock has already confirmed its breakout from its previous hurdles. So sort of, cup and handle pattern has been confirmed, and from here on, the stock is likely to give another 5 to 6% move in next probably 2 to 3 trading sessions. Another disclosure, we have recommended this to our clients through call option. So we are a bit on the stock. Any pullback towards 1260, 1265 would be an excellent buying opportunity, and the immediate target, as I said, would be around 1360 to 1400.
Okay, that's the technical take coming in on CDSL. But moving on, let's shift focus to the IT major Infosys. And Ansh, that's the sector that you track very closely. And despite not a great set of numbers, the stock is just inching upwards. Help us understand what's the reason. Is the market looking beyond Q4?
That's right. So let's start with quarter numbers only, and we are seeing that they have reported revenue in CC terms of minus 3.5%. Also in dollar terms, we are seeing revenue going down by 4.2%. In rupee terms also, it was down by around 2%. But if we talk about profit, then that has gone up by more than 3%, actually 3.3% sequentially. If we talk about margins, then that has come down from 21.3% directly to around 20.95%. But this was still above the street estimate, so that's why this is seen as a positive thing. So if we talk about guidance, then for FY26, despite of the uncertainties, they have given a revenue growth of 0 to 3%, indicating some moderate growth here in constant currency terms. Also on operating margin basis, we are seeing guidance of around 20 to 22%, which is unchanged. We also have few brokerages, and LRA has actually upgraded their rating from reduced to accumulate, and they have given a target price of 1530, whereas Motilal has given a neutral rating with a target price of 1600, and NTK has also come up with a report and they have retained hold rating, giving a target price of 1750.
All right, that's Infosys on the back of the numbers, but IT's cautious mood continues as Infosys also has reported a rather weak set of numbers along with the guidance. The company continues to find its footing even as deal wins remain rather steady. Let's go across and listen into the word coming in from the management of Infosys on the large deal wins.
So we feel well positioned in this environment to look at both growth and both cost areas as clients look at them. We see there's uncertainty in the environment. In terms of mega deals, we had 2 mega deals in the last financial year. We have a pipeline of mega deals today. What is sort of what we saw in the past when things of this nature happen, which is changes in the environment, there's also an interest with clients on cost takeout, automation and efficiency and consolidation. We will see how it plays out because it's only a few days as clients have looked at it. But we have seen our large deals moving, meaning which we have closed, moving into the next phases as was evident.
Yeah, so on the guidance, as I said earlier, there are multiple models that we have built. At the bottom of the guidance, we have assumed, heightened impact from all the macro environment. And on the top end of the guidance, we have assumed steady to marginally improving, environment.
All right, viewers, but with this, it's now time to slip into a very short break in this edition of Market Fatafat. Don't go anywhere, we'll be right back.
All right, welcome back. You're tuned into Market Fatafat, where we're taking all the stocks that are buzzing away in trade. Let's resume then. Sameet, coming to you. Tech Mahindra is the name that you picked out for us. That's the top Nifty gainer. Tell us on the charts, what do you see for this counter? That's up and away almost 5%. Now, all these IT counters have seen fair bit of correction from here on. Do you see, these counters pick up steam from here on?
See, this stock has already corrected quite sharply in tandem with its, larger peers. Now, it seems that at least for a while, the fall has been arrested and the stock is now trading around its interesting juncture. So 20 exponential moving average placed around 1350. So once this stock maintains its position for a day or two above 1350, we could see this bounce back getting extended towards 1450 and 1500. So stock is now trading at an important juncture, and as I said, 2 days close beyond 1350 would certainly give an extended pullback from here.
That's about Tech Mahindra and one of the majors in the IT space. But let's put the spotlight on defense sector because Ravinder has got us the details. Why are we discussing about this particular sector and what's Nuvama's take on this? Ravinder?
Well, as defense sector is in focus, where Nuvama has come out with a note on defense sector, and they have initiated a buy rating on BDL with target price of rupees 1650, and on HAL they have initiated a buy rating with target price of rupees 5150, and they have maintained a buy rating on BEL with target price of rupees 385 as compared to 350. If we talk about BDL, that they say that BDL is one of the leading DPSUs in India and one of the biggest manufacturer and supplier of SAMs, torpedoes and ATGMs to Indian Armed Force, and BDL also plan to foray into new segment, guided bombs, warehouse manufacturing, space application, etc. And Nuvama expect a revenue, EBITDA, EPS CAGR of 55%, 62%, 55% over FY25 to 27. And on HAL, they say that the HAL specializes in manufacturing fighter jet, combat helicopters, and near monopoly in the Indian aerospace and defense industry. Nuvama estimate a revenue, EBITDA, EPS CAGR will be 26%, 19%, 12% over FY25 to 27, which is driven by a strong execution. And on BEL, they say that the BEL remains the top pick in the Indian defense sector, and BEL is a leading supplier to all three armed force and the biggest defense electronic beneficiary to rupees 1.1 trillion plus pipeline over next 2 to 3 years. They have revised FY25, 26 and 27 EPS by -5%, -2% and 9%. So back of this brokerage note, major defense stock is buzzing in today's trading session.
Right, that's the defense pack in focus today on the back of that brokerage note. But coming to you, Sameet, UPL is what you've picked out for us. That is also up 1.5% today. In the last 5 days, it has moved up 6%. Tell us, what do you see on the charts? In fact, this one's been an outperformer. It has outperformed the market. In the last 6 months, it has traded up 28%, even during the market drawdown. So do you see more up move coming in, the positive momentum to continue on UPL?
Yes, as you rightly pointed out, this stock, was bucking the trend since last 2 to 3 months. This has been maintaining its sturdy structure. A series of higher highs, higher lows can be witnessed on daily time frame charts. And this stock is now on the verge of a breakout from its, previous order. The multi-month resistance can be seen in the zone of 670, 675. And the stock is clearly knocking the door around its important resistance zone. So once 670, 72 is, crossed with some authority, the kind of volumes that we have been witnessing, if there's some further surge in volumes also, followed by a, breakout beyond 672, this stock would certainly give a move towards 700. So, the chart structure is quite interesting. Minor pullbacks towards 640, 635 are likely to get poured into. And once 672 breakout is, confirmed, stock is likely to head towards 700.
Alright, that's about UPL, but let's put the spotlight on Exide, because the company has come out with an announcement that they're going to be investing fresh money, almost 299 crores in their EV, and that is battery subsidiary EESL, because with this now the full amount of investment that Exide has done so far stands at 3,600 rupees. Now do remember that this is one of their subsidiaries which actually manufactures the EV batteries and still is in the loss making, but nevertheless the company has already come out with their long-term plans, or rather at least in the midterm they are looking to get an investment target of 4,500 crores and then eventually scaling up to that 6,000 crore mark. And as we know that Exide has already gotten announcements with Hyundai and Kia in the past, and Q4 FY25 numbers will be very crucial to watch out for, because in the past Exide has already mentioned that from this particular quarter itself their battery manufacturing is going to start. So let's wait and watch that what the company exactly tells us when it comes to the results and the earnings con call. But with this particular announcement and with the fresh investment that Exide has come out with, the stock is in focus and the stock is inching higher by around 2% in trade right now.
All right, Exide inching higher, but another high flyer is Indigo, Sameet, another counter which has been bucking the trend. For the last 6 months, it has been on the winning side. It is up almost 20%. Tell us what is the upside, because this counter has been just moving up. From the last 1 year, it has given some great returns of 50-odd%. From here on, what are the levels to watch out for? Because it is inching towards its 52-week high, as I can see.
Clearly, this stock was immune to all the global chaos that we have witnessed in last 3 odd months. In fact, this stock has been continuously showing gravity-defying moves, and there has been no stopping. As we speak, this stock is trading at its all-time highs, and 5500, and this stock is clearly challenging the next psychological mark of 5500. So overall trend has been quite strong. Series of higher highs, lows on all time frame charts, whether it's daily, weekly, or monthly time frame chart. So that shows the inherent strength in this counter. In case short-term, profit booking comes in this stock, 5200, 5300, these are the important supports to watch out for. Any pullback is likely to get bought into, and this stock is clearly heading towards 5600, 5800 in coming weeks.
All right, so that's about Interglobe Aviation. In the past 6 months, the stock has already given a return of over 20%. But with this, viewers, it's once again time to slip into a very short break. Don't go anywhere. We'll be right back.